So I thought we'd share some previous work. We've done a pretty comprehensive outlook in regards to how gold and silver have basically played out going into the FOMC decision that's had a rate hike. So obviously we've only had 5 of those events leading up to that, and we've basically taken it from 2 Fridays prior to the FOMC date, with the closing price of the Thursday after the FOMC being basically the window. So 10 trading days, if you will. As you can clearly see from this slide here, the average return on gold during that period has been minus 2.44%. So obviously if you're short, that would be positive. The range has been anything from minus 0.66% to minus 4.16. On silver, the pullback has been even more severe, minus 4.39%, with the range being from minus 3.35 to minus 5.75. On this slide here, you get a bit of a feel on the actual P&L kind of distribution and swings from a percentage perspective, looking at actually the range on each trading day leading up towards the FOMC meeting. So 5 sample sets of 9 returns respectively, and then of course also a hypothetical short position of $1 million US in exposure, and how that P&L distribution would have looked at. And you can see it's been a relatively well behaved, at least so far. From a positioning perspective, as you can see from this slide here, from a 12-month horizon, the market is not an extreme level in regards to being net long gold, and not an extreme level in regards to being net short silver. What is worth noticing, though, as you can see from this slide, is on a 5-year positioning bias, gold is very much above the 5-year average, while silver is very much below the 5-year average. So I think what's important in regards to kind of the feedback on why gold is holding up so well, that's probably a combination of things, from US dollar being weak, yields probably having a bit of a tactical to technical kind of retracement, and then of course further turbulence coming out of the White House with more senior staff members being fired. One, I think, key takeaway from this is if you look at a kind of a longer term chart here, basically showing this current hiking cycle and how gold and silver has done, you can kind of see clearly it's been well behaved in regards to fading into the hike decision and then bouncing back afterwards. So there could also be a potential other trade here where there's the tactical bias of a negative kind of view going into it, and then a strategic, more medium long-term bias of being positive coming out of the decision. So some food for thought, and of course key risks: weaker US dollar, lower yields, and trade wars potentially kind of kicking up again.